Welcome to Earnings Central. In this video, we'll break down E2open's second quarter fiscal year 2025 earnings call in under 4 minutes. We'll cover the key financials and major takeaways, so you can stay informed without spending hours listening to the full call. Let's get started. E2open reported subscription revenue of $131.6 million for Q2, which was above the midpoint of their guidance range, but still represents a 2.3% year-over-year decline. This was a slight improvement from Q1's decline, showing some progress in their turnaround efforts. Professional services revenue came in at $20.6 million, down 13.1% year-over-year and below expectations. The company expects this segment to improve in the coming quarters as they work through their backlog and close delayed subscription deals. Total revenue for Q2 was $152.2 million, a 4% decline compared to the same quarter last year. Despite the revenue challenges, E2open maintained a strong gross margin of 69%, which was roughly flat year-over-year. Adjusted EBITDA for the quarter was $54.9 million, representing a 36.1% margin. This was a slight improvement from the 35.4% margin in the prior year, driven by cost reduction efforts and operational efficiencies. Now, let's discuss some key takeaways from the earnings call. E2open's management team acknowledged that while they're making progress on their growth initiatives, the pace has been slower than initially expected. They're seeing extended customer timelines for large deals, which is impacting their booking and revenue performance. Despite these challenges, the company reported improvements in both bookings and customer retention compared to Q1. They view Q1 as the low point for the year and expect continued progress in these areas through the end of fiscal year 2025. E2open is focusing heavily on client satisfaction and value delivery as part of their strategy to return to sustainable growth. They're seeing positive results from this approach, with many retained clients opening up new opportunities for upsell and cross-sell. The company highlighted strong demand in their logistics and global trade management solutions. They won significant new logo deals in these areas, demonstrating the value of their comprehensive supply chain offerings. Looking ahead, E2open revised their full-year guidance to reflect the slower-than-expected progress. They now expect subscription revenue growth between -2% to -1% for the full year, with total revenue declining between 4% to 3%. Despite the near-term challenges, management expressed confidence in their strategy and market positioning. They believe the company is on track to return to normalized retention levels and achieve net bookings growth as they enter fiscal year 2026. In conclusion, while E2open faces some headwinds in their turnaround efforts, they're seeing signs of progress and remain committed to their goal of returning to double-digit top-line growth in the future. Investors will be watching closely to see if the company can accelerate its momentum in the coming quarters. That wraps up our recap of E2open's second quarter fiscal year 2025 earnings call. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way. So hit that subscribe button and never miss an update from Earnings Central.